It is 13th of June on a Monday itself. Time now is 3:12 p.m. in Singapore time. My name is Dylan. Welcome back to my daily trading analysis video. Alright, so congratulations for those who have entered the trade for the New Zealand dollar against the Japanese yen and against the US dollar. Believe that you have earned about 130 over pips to 140 pips for the New Zealand dollar against the Japanese yen, and as for New Zealand against US dollar, there should be about 70-80 pips. So congratulations for that. And before I go into those two currency pair, let me touch on the pound against US dollar, as this month itself our focus will be back onto the pound as the Brexit is getting nearer and the actual date is on the 23rd of June for the Brexit referendum. So let's kick off with the pound against the US dollar. First, let's take a look at the day one chart. Alright, so in the day one chart itself, we have seen that the price has fallen for the fifth consecutive days and will soon reach the major support at the price of 1.4080. Alright, that's still about close to 100 pips, exactly 100 pips before it touches the key support level. So we are still expecting that the price will continue to fall, as there's too much uncertainty whether the UK will exit the EU zone. And uncertainty itself, the market will usually price it as bad for the currency, bad for the economy. So more depreciation should be coming onwards. And but against the US dollar, that can be quite tricky, because the Federal Reserve, though, have been saying that they might raise interest rate this month, but data has shown that it is quite impossible, and it is not quite possible for them to raise interest rate anyway before the Brexit, which we have the FOMC Fed Fund rates this coming Thursday. Alright, so into the smaller time frame, let's look at the H1 chart, the 1 hourly chart itself. We have seen that the price has exhausted from the recent wave of depreciation, still not showing any signs of a rebound or continuation of depreciation, but we are looking for a retracement for us to go for another sell opportunity. So we'll be looking for sell opportunity as the price retraces back to the bottom of the previously broken falling trend channel that's based on the 1 hourly chart. Not exactly a falling trend channel. 1.2 point, yeah, there's only 3 point. The 4 point didn't really happen, but then we would like to wait for retracement before we go for sell again. Alright, so let's move on to the next currency pair, New Zealand dollar against the Japanese yen. Alright, so let's take a look at the day one chart. So in the day one chart, we have seen that the price has fallen for the third consecutive day since resisted at the major falling trend line. Right now it is seen supported at 74.52, a key support level, and may go for a retracement before further depreciation, which is happening right now. So into the smaller time frame, 4 hourly chart, we have seen the price has just formed a magic candle. Sorry, I should be going into New Zealand yen 15, 1 hour. Yes, 1 hourly chart. We've seen that price has formed a magic candle just slightly below the key support level at 74.54. Confirmation has formed as well, so that warrants a retracement, and therefore we'll be looking for sell opportunity as it retraces to the price of 75.09. The next resistance level is a minor one, but then we are expecting the price to fall further till it at least touches the rising trend line that we can see right here in the 4 hourly chart. And we can also expect that the price will fall all the way to the major support at 73.21. Because against the Japanese yen, which is a safe haven currency, I do believe that this month it will be good for the Japanese yen. So that is for the New Zealand dollar against the Japanese yen. And next we have the New Zealand dollar against the US dollar. So in the day one chart, price has made significant retracement right here. Let me just remove the trend lines right here. Right, it has made significant retracement. Right now it is seen seated and supported at the support level 0.7033, previous resistance turn key support level. So expected the price to resume appreciation very soon. And into the 1 hourly chart, in fact, we have seen that the price has begun to rebound off from the support level. So into the smaller time frame 1 hourly chart, we can see the price is exhausted from the previous wave of depreciation, or rather the retracement, and stated at key support level 0.7033. Now it has begun to rebound off from that support level, so we'll be looking for buy opportunity in the smaller time frame 15-minute charts when it retraces, make a quick retracement for a better price to go for the buy. So for those who have entered this trade, it is about time that you can consider to exit everything, because I do believe what's on my mind right now is that I do believe the New Zealand dollar will continue to appreciate, since previously the Reserve Bank of New Zealand did not cut interest rate. So usually when that happens, we will see the price will continue to appreciate further. So therefore you may want to close that trade and look for buy opportunity instead. But instead of New Zealand dollar against US dollar, for myself, I'll be looking at the next currency pair, Aussie against US dollar, to go for the buy instead. So let me just go through the analysis a little bit. In the day one chart, right, we have seen that the price has fallen for 2 consecutive days, seated at the key resistance turn support level at the price of 0.7369. And similarly for the rebound, we have seen magic candle. Right now it's already beginning to rebound. So expected the price to resume appreciation. So into the smaller time frame 15-minute chart, all the way to 15-minute chart, we've seen right here magic candle. Price is exhausted, moving sideways, begins to rebound. So looking for the buy opportunity at the close above the resistance level of 0.7422. Oops, I missed it out on my reports. Anyway, if you're watching this video, just say that the resistance level I'm referring to is 0.7422. A close above that level will warrant a further appreciation to a higher level. If you still remember, in the weekly chart itself, we have expected the price to appreciate all the way back to the bottom of the previously broken major falling trend channel, somewhere at the price of 0.7811. So we are definitely expecting more appreciation to come, and till the Reserve Bank of Australia begins to announce further rate cuts for them to weaken the currency further. So that is for the Aussie against the US dollar. So that's pretty much for today. So thank you for watching, and I will see you again tomorrow. Thank you.